This is More Knowledge, More Wealth with your host, Gabriel Shahin. Gabriel is a certified financial planner and a registered investment advisor at Falcon Wealth Planning. This show does not intend to provide personalized investment advice through this broadcast and does not represent that the services or securities discussed are suitable for any investor. Investors are advised not to rely on any information contained in the broadcast in the process of making a full informed investment decision. Now here's your host, Gabriel Shahin.
Good day. This is Gabriel Shahin, certified financial planner and your host of More Knowledge, More Wealth here on every weekend, talking about all important topics of personal finance. My job is to go over the knowledge you need to increase your wealth. Now, to the listener, you can always reach out to myself or any one of our colleagues here at Falcon Wealth Planning. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Or visit our website at falconwealthplanning.com. That's falconwp.com for short, where you can go on our Knowledge Center, which gives you a direct link to YouTube, where we've had well over 1 million views, multiple videos that help answer the questions that you have. And if you want to put an inquiry so we can talk about it on the show or create a Knowledge Center video, please send your inquiry to radio@falconwp.com. That's radio@falconwp.com. And also you can go get this episode, any one of our previous episodes on Spotify, podcasts, you name it, folks. Now, I'm the president of Falcon Wealth Planning. We are a fee-only, non-commission, true fiduciary, folks. And we talk about all important topics of personal finance. That's where you are today, how retirement looks like, investments, estate planning, insurance, folks, you name it. Anything that involves a dollar sign, we can help you with. And we are offering 1 to 2 meetings, 1 to 2 hours of our time, folks, at no cost to help relate this show to your specific situation. And we have offices all across the country that we can help you with. Folks, give us a buzz. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird, where we can help answer those questions that you have to help with your financial situation. Good day, folks. Lots to talk about today. I've missed you guys. I've been on a segment of going over my new book of How the Rich Gets Richer. I've been discussing that on multiple podcasts, let alone our podcast here of More Knowledge, More Wealth. And we go over all of those 11 chapters and kind of what's in those chapters and really having that dialogue so you can hear it straight from my voice. And I've heard that feedback from people that have discussed saying they can hear my voice in the book. Well, that makes sense. That's refreshing. That's validating. So thank you so much for so much positive feedback. And for those who haven't read it, feel free to grab it on Amazon, Barnes & Noble, Target, wherever it is. It's everywhere. And still an Amazon #1 bestseller and just got #1 in finance this past week. So super excited about that. Our publisher actually is going to get us nice little stickers we can put on the book saying Amazon #1 bestseller, or they're doing it, or whatever. So want to talk about current events. I feel like so long, no, I haven't talked about current events. So finally, I feel I could be a modern day financial advisor and discuss what's going on in the world. So we are going over a couple items today. I'll talk about tariffs. And then I want to start off with big tech still crushing their numbers. It almost feels like there is no stopping big tech. You've had Meta that was outperforming. You're looking at Amazon, Microsoft, and so on. Google, it seems like they're still being positive. They're still growing. They're still outperforming the S&P 500. Hell, 70% of the returns of the S&P 500 are coming from the 10 largest companies there. So this is an interesting idea, which always has us guessing and talking about diversification. Because remember, that's the play, right? You can't have everything in tech, or can you? There have been tilts. I know here at Falcon Wealth, we have tilts in our portfolio towards these tech profitable companies, which is very logical. These are still fast growing companies. You still have the NVIDIA that is still flying, growing at 50% plus growth. You have multiple different things happening with Facebook that's growing over 100% on certain indices that they're tracking. You have so many different items that are out there. And then you still, of course, have the Apple. Kind of these days, crazy to think, they're slow and steady, still being very profitable. But the idea is what with all this? Is putting all your money in tech is the wrong thing to do. But my God, for the people that have been doing it, they've been crushing it. And so I've recently had a professional out there saying, there is no end to big tech. There is no end. It's going to keep going up. Like that to me is a warning sign, by the way. It's like when somebody says it's not going to drop, that's where you normally see it dropping. But there could be some valuable kind of idea of, well, if they're still growing, they're actually profitable, they're making money, then it maybe is different than the dot-com era. It is different than the tech wreck that we've had. So it makes sense to have diversification. But with that being said, in 2022, those things were down 40%. So you can't always have everything winning always at the exact same time. By the way, folks, if you're just joining me, you're listening to Gabriel Shahin, Certified Financial Planner, and your host of More Knowledge, More Wealth here on every weekend. And we are talking about all important topics of personal finance. And today we are talking about, just in general, what's going on with big tech. We have earnings season coming around the corner, and we have the markets responding. And hey, a lot of us are happy. We're feeling good because a lot of us do have big tech in the portfolio. I know here at our firm, we have a large exposure to big tech for our clients' assets. But we also see the value of diversification because what's great today may not be great tomorrow. So this is where you have to identify yourself. You don't hear what I'm saying today and now have an overweighting in big tech. You don't hear what I'm saying today and actually sell it either. You have to identify your situation and see the risks that you're comfortable taking and know what index are you buying. Are you buying a growth fund? Are you buying QQQ? Are you buying like truly big tech specifically? So all of these have its inherent risk. All of them are exposed to large cap growth investments. Some of these are tech, like is Amazon even a tech company anymore? Well, they have a bunch of robotics, don't they? But is it a tech company? Yeah, it's online. Maybe you can compare it to a Kroger now because a lot of people are getting groceries and goods and the Best Buys of the world from there. What do you call Tesla? Sure, we could say that's a tech company, right? But it's a car company. Now it's a robotics company. Like, what is it really? So this is where we always have to just identify that maybe the scope could be changing. This is what makes investment industry so important. And these are not just million-dollar questions, but billion and trillion-dollar questions. Who would have thought that NVIDIA would be the largest company in the world? I'm sure a few of you said, oh, I thought so, of course, but they fell into that by accident. They were creating GPU, they were creating graphic cards for computers, which by natural just need, they needed to have a higher usage, a higher, more powerful chip. And then that moved into the AI world. That's why they say AI, Bitcoin, and so on is not very green because it uses so much energy. Like, who would have thought that Tesla, crazy man Elon Musk, is now growing at a point where now he's what? He's looking at self-driving cars, which he's talked about for years, but it's actually happening. And he's actually gotten approval in multiple states. And now he's looking at creating these robots that are $30,000. I heard a pitch from somebody that's creating these robots for high industrial jobs that said each robot is going to be $250,000. And oh, by the way, it won't be ready for like 5, 6, 7 years. Who the hell would want that when you can get an Optimus robot for $30,000 who has an assembly line ready to build it? Yeah, people say that could be a $20 trillion company. Well, heck, if everybody has one of those, it's like the Jetsons, somebody at my house washing the dishes, helping with the kids, doing whatever. Yeah, maybe it does make sense. It's cheaper than any maid you can get. And you have nobody calling in sick, nobody complaining, and nobody potentially filing a lawsuit against you. So these are ideas that we have to be forward thinking. And the goal with all of this is what? Execution. Everything works if it's executed properly. This is what makes our industry so important. They take the information today, whether it's on the metaverse, whether it's on AI, whether it's on technology and goals that are coming out, they take action or hearing what they're saying today and what the results are today and seeing what they're just that much closer on their execution plan. That's what makes these people visionaries. What they do today is not the end goal. The end goal for them, quite frankly, might be what? It could be 30 years from now in world domination. I'll give you an example. I'm just thinking of Elon because I went on a rant on that. Think about all the little things he's doing. He's created a solar company. Okay, great. Well, if he's wanting to colonize Mars, they're going to need energy, right? There's no fossil fuels under there. Okay, he has solar. He wants to create cars that, yet again, can work on electricity, which could be done through solar. Okay, that works in Mars too. Now he has this company called the Boring Company, underground tunnels. Interesting. That could probably be helpful in Mars as well. SpaceX, hey, we kind of need that to go there. Starlink, hey, you have internet, phone access, communication. Like if you actually, like I'm just thinking, I'm kind of piecing this all together on air right now, but maybe he's just planning, all these little companies are planning for colonization of Mars. Like these people are crazy. I'm sorry, I'm hearing myself talk and it's crazy, but now you're starting to piece this all together. Hey, this could be a good post here on social media because it's absolutely insane how these people's minds work. And Wall Street banks on their craziness. Who would have thought SpaceX now leads 90% of the satellites on Earth? Heck, Elon could be the most powerful person in the world, providing internet to everybody, knowing where we are at all times, knowing what we're Googling at all times, having all of our information. Man, this guy's starting to be like the Lex Luthor of our time. So what are we saying? We're saying this is investments. What we hear today sounds great. What we hear and invest in today could be great. But all you need is one mishap, one problem with the government, one exposure of what you're doing wrong to ruin everything. So when we come back, I talked about big tech. We're going to come back and we are going to talk about tariffs. Way more boring than what I was talking about with world domination, but still relevant in your finance. We'll be right back after a few words. This is Gabriel Shahin, Certified Financial Planner and President of Falcon Wealth Planning. We wanted to offer you a free financial assessment for listening to the show so you can help relate it to your specific situation. We offer multiple services such as retirement planning, where you are today, how retirement looks like, talking about Social Security, real estate, planning, even if you own a business, talking about taxes, not just how to save money today, but also throughout retirement. Talk about investments, making sure you're avoiding those high fees, costs, commissions, and also estate planning and insurance, just making sure you're properly protected if, God forbid, something were to happen. And we're offering 1 to 2 meetings, 1 to 2 hours of our time at no cost. Give us a call. We would love to help. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Or visit our website at falconwealthplanning.com. That's falconwp.com for short, and fill out the form fill right there on our site. Welcome back, folks. This is Gabriel Shahin, Certified Financial Planner, and your host of More Knowledge, More Wealth here in every weekend. And we're talking about all important topics of personal finance. And that first segment, I talked about tech and AI. This segment, I'm talking about tariffs. So I took it to an extreme talking about AI, technology, and kind of what's going on right now with the boom really coming from the tech sector. And hey, that's happened for the past few years. It's happened for the past 4 or 5 years. And yes, a lot of people want to have overexposure to that. My whole point is things are good, they're going great. And when things are bad, it is terrible. And just know, the boom that happened with the internet age, this might be the same thing with the AI age, for the positive and for the negative. The multiple companies that are out today might not be out tomorrow. So beware. And I know there's a lot of you that are getting excited about private funds that are out there, private investments, investing in the SpaceX and the Perplexity and OpenAI. Well, what is out today might not last tomorrow. Keep in mind, as big and great as Tesla is today, it almost went out of business in a low interest rate environment, in an easy pitch environment for one of the greatest and most proven salespeople that are out there. He still almost went out of business. So beware. So let's transition to a much more boring conversation, and that is about tariffs. And we heard starting August 1st now that there's going to be tariffs on India. Man, I got a bunch of friends, and my in-laws are jewelers, and they get a lot of their stuff, where? From India. A lot of diamonds are happening over there. So this is, of course, problematic, right? And so going into that and looking into that, what are we really talking about here? We are looking at possible on jewelry, apparel, generic drugs, auto parts, and electronics. Well, hell, all of that applies to me. India is massive. There's 1.3 trillion people in India. It's sad they don't have their own race when you go on a college application. I mean, my God, these people are like 1/7 of the world population. So the idea is this group, this country, we have a very good relation. Keep in mind, this place was colonized by England back in the day, right? They speak very good English, value education, and strong in technology, let alone everything else that I just said. So this is an impact on us. Now, this could cost us more money. Let me rephrase. I was trying to sugarcoat it. It's going to cost us more money. But the counter to this is what? that now we're going to be getting income, right? We're going to be getting more money. And when we look at what has happened over the past few months during the current administration, is we're actually now seeing a surplus. You have roughly 100% more income from previous year. Tariffs could work. Remember, our administration just lowered taxes when it was probably the stupidest financial decision you could probably ever do. We have a deficit, and they lowered taxes, and we still have a deficit. Our interest alone is trillions of dollars a year. So what the hell are they thinking? The idea is you have more money. You have more money to spend. You have more money to afford the higher expenses of maybe increased costs. And in addition to that, now they have tariffs, like these additional tariffs, that brings in income to our country. And based on some of the reports that I have here, shows that we actually did do a fairly good job. So when you take a look at from the middle of last month, which is in July, we had an increase of $100 billion of tariff revenue for the year, 111.5% increase compared to the same period of 2024. Now, this is pretty important because that's contributing to what? 5% of the federal budget. When you look at monthly trends, when you look at April, and you look at this $16 billion that was collected, which was up from $9.6 billion in March, that's a 135% increase. Yet again, these are crucial implementations. And they're still not done. One of the biggest countries out there is China. We do a lot of business with them. I've gone on record saying, and it's pretty obvious, as we have a lot of Chinese clients, a lot of them do import-export, and we have a lot of relations, those who have direct communication with President Xi of China, saying what? America needs China. Say what you want, but China also needs America. And yes, as America is building other foreign relations that's out there, it's still relevant. They're still a powerhouse. And that country is still really good at execution. Maybe that is the only positive of a dictatorship, which, if I may say what China is when their dictator says, I need this built. Here in California, when we want to build a freeway, a 10-mile stretch can take 10 years. Conservatively. Over there, a 10-mile stretch takes less than 2 months. So there are some positive, I'm not saying of dictatorships, let's calm down. That's a terrible thing, right? We saw what happened with Germany and Russia and a few other places, Italy. But what I'm saying is the idea with a proper and fair execution strategy where there's no bureaucracy getting in anybody's way, this is what America utilizes. There's a reason we selected China. And labor isn't as cheap as it used to be either. Now, there's rumors of slave labor, which we can all agree is terrible, but still, there is concepts here and income that is still out there, things that we're still negotiating on with no retaliation. So the big negotiation piece will be China. By the way, folks, if you're just joining me, you're listening to Gabriel Shahin, Certified Financial Planner, and your host of More Knowledge, More Wealth here on every weekend. We're talking about all important topics of personal finance. And today we are talking about the tariff conversation. And the 25% tariff that America is imposing on India right now, which will bring income into our country, but will also make costs more expensive. So all of this is related. It affects the stock market. Imagine having a company that gets their stuff from India right now. They are nervous. They are struggling right now, and they are preparing for alternatives, which, oh, by the way, affects everything that we do. Affects how they do business and affects how we purchase. The brands we like might be changed tomorrow. So just always take a look at what's going on and how it directly and indirectly impacts you. The idea is balance, yet again. But here's where I give you kind of an interesting concept on this. People who pay a lot in taxes, who saved a lot of taxes, are people who make a lot of money. There's a strong correlation of the amount of taxes somebody pays and how much money they make. But the lower income people that saved a bunch in taxes, what if they made a married filing joint couple with 2 kids, $50,000 a year? How much is that really going to save them? Okay, let's say it added $7,000 to their bottom line. but now they still have to buy things to live on. The idea is it's probably going to be more than $7,000. So we will see. It's to be determined, and it's why you see the stock market going up and down, depending on the news that comes out that day, depending if Powell talks and opens his mouth. Our Fed chair, who, by the way, Trump doesn't like very much, who, oh, by the way, appointed him back in his first term in 2016. So all of this is related. The market cares. Geopolitical becomes a part of our job, not that we care to get into politics, but the idea is it impacts your portfolio. And this is why when you saw international doing so great, especially during the drops that happened in April of 2025, a lot of it maybe wasn't the companies itself that was doing so good. It was the currency of the American dollar that was dropping. So naturally, international would do better. So there could still be fantastic opportunity where you shouldn't get out of international right now. Going back to the first segment, this is where diversification matters. What we use today, what we're doing today in America is not going to be the leader forever. The world is catching up. And this is why you've seen, and you look at an emerging market type index where academically speaking, it should have the highest expected rate of return, which is a very logical piece. But intellectual property and looking at the big behemoths these days are things that should be taken into consideration for your portfolio. So yes, this is where we typically say, reach out for help, do research. It takes time, I get it, but this is your money and this is your future. And one thing you can't avoid is sitting on the sidelines, because if you sit on the sidelines, this stuff can go right past you. So you have to be proactive with everything that you do.
That was a fast show, folks. I want to thank you for tuning in with us this weekend. You can always reach out to myself or any one of our colleagues here at Falcon Wealth Planning. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Or visit our website at falconwealthplanning.com. That's falconwp.com for short, where you can go and visit our Knowledge Center, which redirects you to YouTube. We have over 1 million views, folks. And if you want us to discuss anything on YouTube, on the show, whatever, send your inquiry to radio@falconwp.com. That's radio@falconwp.com. And if you want this episode, any one of our previous episodes, you can go on podcast, Spotify. We have them all there. And folks, we want to thank you for your trust. We want you to feel free and feel comfortable to reach out with any questions that you have. I want you to have a fantastic weekend. Have a great week, and God bless.